Hi there, Shingirai here again with another update on portfolio performance over the past week. We saw a generally risk-off week with sell-off across all asset classes, and that would see portfolio returns ranging from CBAM 4 returning minus 1.32% to CBAM 1v2 returning minus 0.71%. The only place to hide, it seemed, was going to be in fixed income, and you'd see that strong performance for government bonds in Europe and treasuries in the United States, which were up 0.15% and minus 0.26% respectively. We also saw that duration protection that's being offered by high-yield bonds, and that's reflected in Fidelity Global High Yield, returning minus 0.21% on the week. Switching over to a one-week basis, we continue to see that persistence of headwinds for the Hypnosis Songs Trust Fund, which was initially coming into the quarter based on speculation on whether the fund would be able to refinance $700 million worth of debt in order to refinance purchases of music catalogs, but that was later resolved at relatively attractive terms. But we still continue to see that deep discount to net asset value being an attractive point for continuing to hold the fund. Speaking of weakness as well and headwinds, we continue to see these persist across Chinese positions through Columbia Threadneedle China and HSBC China, both down more than 2.6% on the one-week basis on concerns rather around the property market in China, and also just that speculation on China's next steps with regards to the zero-tolerance COVID lockdown policy. But looking at valuations, historically Chinese equities are looking relatively stable, and the sell-off that we've seen here in the Chinese market is similar to that of the market pullbacks of the years 2000, 2001 and 2000, 2009, 2008, 2009 rather, a global financial crisis, with even a cheaper price-to-book ratio of about 1.5, meaning that Chinese valuations are relatively attractive. Switching over to a quarter-to-date basis, 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks coming into Q4 of the year, and that would see portfolio returns range from CBAM 1 returning minus 1.84% to CBAM 5 V2 returning minus 0.28%. We saw a bit of a turnaround there for performance of Japanese equities, up 1.60% as the country reopened its borders to domestic tourism and allowing really tourists to come in from all over the world, which is anticipated to support the domestic economy through tourist spend. Then we look over to United States, where we saw high yield also outperforming, up 1.25% on a quarter-to-date basis, and Fidelity Global High Yield alongside, up 1.19% on a quarter-to-date basis, and highlighting again that performance that you get from the shorter duration protection from high yields. As I touched on earlier, we continue to see headwinds for Hypnosis, but then again, at a deep discount to net asset value, we do anticipate that this performance will correct itself in the medium to long term, despite the minus 7.97% performance on the quarter to date. As you may well know, there was a sharp sell-off of UK assets on the back of the announcement of the UK mini budget from Prime Minister Liz Truss, and that would see all stocks gilts down minus 5.56% in a fire sale scenario. We also saw some headwinds there from one of our top performers, iShares Global Clean Energy, selling off somewhat on the back of some easing in the price pressures of global crude oil. But then again, if you were looking on a year-to-date basis, you would notice clean energy through iShares and Pictet Clean Energy continue to be one of the top performing themes as the world begins to look at alternative solutions for energy on the back of the tensions on the eastern part of Europe.